Hi everyone, I hope you can hear us. We'll be starting soon. If you are with us on Facebook Live right now watching this, hi Winnie. Yeah, can you help us just by sharing this video with your friends so that they can all learn on this topic of investing in times of crisis? Invite your friends to watch with us and share on your wall as well. Thank you very much. All right, in 2 minutes time, we'll be starting. So today's topic is on investing in times of crisis. And we are very fortunate to be able to invite Colin Xiao, who is the author of The Systematic Trader, as well as the Trader's Blueprint, to be our guest author this evening. So if you are with us right now, please help us to share this video with your friends so that more people can watch together with us. Hello, Edgar. All right, and get all your burning questions ready, questions that you want to ask Colin on the topic of investing in times of crisis. And once we start the show, kindly post your question in the comment box, and then I'll invite Colin to respond to them. 1 more minute. Hi, Thomas. Hi, Ching Boon. Thanks for joining us. All right, we shall start our session. First and foremost, thank you everyone for investing your evening with us to learn together on the topic of investing in times of crisis. I hope everyone is faring well in these very uncertain times. As you know, the stock market is very uncertain as well. Okay. So before we start, we need your participation. Hope you can, if you have any questions on the topic of investing in times of crisis, please get them ready and then post it into the comment box. Then I'll be able to invite Colin to respond to them. Help us to share this Facebook Live video as well with your friends so that we can all learn together. And please help to like this video to encourage us. Thank you very much. Okay, three lucky viewers today will walk away with a copy of The Systematic Trader. This will be for viewers who post questions during the live session itself in the comment box. It doesn't matter whether we pick your question or not, but as long as you post the question, you will qualify for the lucky draw. So take note on Candid Creation Publishing page on Monday, and you will know who are the winners. Today, we have none other than Colin Xiao, who is with us. So a brief intro of Colin. Colin is an author, speaker, and trader. He's also a qualified chartered portfolio manager holding a CFP qualification and a member of Mensa Singapore. So obviously, Colin, very high IQ person. Also a member of Technical Analyst Society Singapore. He's also a trainer with Cybercode and also inventor of the stock trading software Trader GPS. Colin is obviously a regular speaker at conferences and seminars such as Share Investment Conference, Share Investor, Invest Carnival, Philips iFest, and MetaStock Conference. Disclaimer, all right, as usual, everything we share today, Please do not take them as financial advice. Do your own due diligence. We are merely sharing experience. So past track record cannot be taken as the future performance. All right. So I'm going to stop the screen share. Just give me a minute so that you can see us.
Yes.
All right.
You're live.
Colin, finally they can see you. You want to say hello to our viewers?
Hello, hi everyone. Good to see everyone here.
Okay,
if you can
great.
Hear me,
Let's see.
yes.
Thank you very much for joining us this evening, Colin. Thanks for spending your time. I know you have a very, very long day today. We were just talking about it. Obviously, you're feeling very tired, but you are still helping us and answering questions from our viewers.
Thanks so much for inviting me. You know, it's I've been really be a great publisher, and even to today you are still helping me. So thank you so much.
Welcome. Hey, hello Sam. Sam just joined us. Yep. Okay, so now is the time for you all to pose any burning questions on the topic of investing in time of crisis to our guest author, Colin. Yep. Any questions you would like to know on the topic of investing in time of crisis? Okay. While you're warming up, I think I will start with the first question to Colin. So Colin, the market in the past few weeks I've seen is been very erratic. Moving up and down. So I guess the big question on everybody's mind right now is what is happening right now, and where do you think the market is heading?
Oh, what's happening right now? Okay, since the market has made its high, I think it was on the 20th. It's very easy to remember when is the market high. The market high was on the 20th of February, 2020. Nice number, right?
Wow.
So that was actually a market high. COVID started somewhere in the December in China, but really didn't affect the market, the stock market. But on the 20th of December, 20th of February, the market started to really correct. From 20th onwards, it corrected almost like 30%. Normally, when we talk about the stock market, a correction of 20% is considered a bear market. But the market, the index really, I'm talking about S&P index, right? Corrected more than 30%. But since then, it has recovered almost about half. Right now, we are down about 15%, so about half recovery since after this COVID situation happened. So I think going forward, market is going to be challenging. Okay, when the market corrected, all the central banks started to give free money. Started to reduce their interest rate. Started with China reducing their interest rate, and later part with Japan. Okay, also reducing their interest rate, and then there are also a lot of injection of liberating of the banking system and things like that. Then US also very quickly reduced the Fed also very quickly reduced all the interest rate. So right now all the central bank are racing to not zero, racing to minus on interest rate. So in a way they are punishing the savers. People put money in the banks, they will be suffering, and at the same time, so it's quite challenging right now in this period.
Right. So it sounds like it's another round of QE.
Now we have this called QE infinity.
QE infinity. Yes. Whoa.
This QE
is scary, man.
In the 2008, right? 9, we have QE1, QE2, things like that. But now we have what we call QE infinity. So they will, whatever it takes, they will revive the market. But I think the challenge right now is not really in the QE, because the challenge is when they did the QE, the idea was really to help the economy, you know, to help those people who are closing. I mean, they are not having any business right now, and they want to take care of the workers. They are potentially going to be out of job. But what happened is, which is like what happened in 08, 09, the money that is pumped into the system, people start to, instead of going into the real economy to help the business, of course there are targeted programs for the economy, but majority of the money still go back to people buying like assets, you know, buying like stocks, you know, bonds and junk bonds and things like that. Yeah. So we have cheap money in one sense, and then people who have access to all this cheap money take risk again. Yeah.
I see. Okay, as we are talking, the questions are all flowing in. Very good. So if you have just joined us, welcome once again. Hi, Mi-in. Hi, May. Thanks for joining us. We are right now live with Colin Xiao, who is the author of The Systematic Trader. And the topic we have today is investing in times of crisis. So if any of you have any burning questions on this topic, please post it in the comment box, and then I will invite Colin to respond to them. We may not have time to respond to all the questions, but whoever posts question will definitely qualify for the lucky draw happening at the end of today's session. So 3 of you will walk away with a copy of Colin's book, which is The Systematic Trader. Okay, so let me see. Colin, first question from Sam. Yep. What are the 3 things I should consider when investing in these times of uncertainty?
I think the first thing we want to watch is really on our the leverage. You know, when we are in this uncertain time, if we take on too much debt, that will be no good. You know, so whether is it you're investing in house, but you know, investing in property, but you can overdo it. You know, you can over leverage. I think that will be something that is not advisable. So even if you over leverage on investing in stocks and things like that, don't overdo it. I think that's the first thing you should really watch it. You should not do it. The second thing is really people get in usually too early. Okay, really too early. When the market crashed on the 20th of February, right? Recently I have a class and one of the students is actually a reminder. Then he was telling me, Colin, wow, nowadays there are people putting up the queue line, you know, that they pull up the thing and then let people queue up, open up account, you know. So there's a queue on the brokerage house. On top of that, another of my Philip colleague last time is saying normally an account takes about 1.5 weeks to be approved, but now it takes 1 month to approve. You know, so people are queuing up to open up account. So I want to share with you some context of bear market. So we have like a few recession. We have a recession in 2000 to 2003. We have like we have the SARS. You know, we have the SARS period, and then in between that we had the September 11 in 2001. So this whole period from 2000 to 2003. The market corrected 47%, and it took like 900 days. Okay, then the global financial crisis is about 500 days, 57%. 500 days, 57%. So from 07 to 09, about 500 days. Right now we are about 60 days. Right now we are about 60 days on the high, and we are only down about 15%. Yeah. So we may be still early in this. If let's say we are going to recession, we may be still early. So what we should do is, second thing, don't jump in too early, you know, because if you're going in too early, then it's risky. The last thing is really, if you can have some sort of market timing tool, you know, some sort of way to know exactly when is the bottom. Give you a clue, right? An average bear market is about 11 months. 11 months. Okay, right now we are like 2 months into the bear market. So just to give you some context. Okay, so so don't leverage. Don't leverage. Don't get in too early. You know, usually people get in too late. They leverage too fast and they get in too early, and really learn how to protect
Get
yourself,
burnt.
knowing how to get in and out. Yeah. Yeah.
All right.
Okay.
Next question comes from Winnie.
Ah.
Winnie is asking, given low oil prices, almost negative, is it? Do you see that as a sign of possible booster swing for renewable energy stocks?
In fact, I think it's the reverse, because they will talk about solar energy, talk about nuclear energy. There are talks of all this energy, but right now with the oil prices so low, right? You know, there will be less push towards renewable, because it will make sense if oil prices are high. Then you use solar energy, because if you use solar energy and the cost is lower, right? Then it makes sense. But right now with oil prices so low, right? All this solar energy or nuclear energy, right, will become higher already. So it actually it will slow the reverse to move towards all this alternative energy. I recently read about some nuclear energy because of all these things, right? Everything slowed down again. Yeah.
That's true. So actually,
it's about supply demand. Now there's so much supply, so you don't need another supply. You see? Yeah.
It is, which is not a good sign for if we talk about global warming and climate change, because
I think
now
the good thing is now COVID no have global warming. Everybody is at home, right?
But with oil dirt cheap, once we bounce back, then we'll all start using the traditional crude oil again.
Yeah, another thing about oil is you cannot. It's not like tap, you know, when you drill for oil, right? Once the oil come up, right, you cannot say, okay, today oil price is cheap. Cannot turn off the drill and keep pumping the oil. You know, if not, it will damage the well. You see, so they will keep pumping this oil. And where do they keep this oil? So what happened in the situation is when the futures went to zero, is because they have all this oil and then they store the oil. They store the oil. Initially, they store the oil on land. Then after that, there's too much. They store the oil in the tankers in the sea, like Singapore along the sea, right? There's tankers over there. But it costs money to store oil also. You know, it costs money to store oil. So what happened is during that period of time, right, is people find that people view, right, it's more worth it to buy oil next month rather than buy oil this month. Because if I buy oil now, I still have to store the oil. And I have to store the oil, and that costs me money. You know. So what happened is they say, no, I don't want. I give you the oil. I don't want the oil right now. I rather buy next month or the following month. You know. So that is the challenge at that time during that time. Yeah.
I see. Yeah. Okay, thank you. Welcome for those who have just joined us. Hi Eugene. Hi Michelle. Hi Bruce. So we are now on FB Live with Colin Xiao, who is the author of The Systematic Trader, and our topic is on investing in times of crisis. So if you have any questions right now, if you have any questions for Colin, please post them in the comment box. 3 copies of his book will be given away to lucky draw winners at the end of this show. All right. And at the same time, if you are watching us, please help us to share this video on your wall, in your groups, so that more people can learn from us as well. Okay. Next question, Colin, comes from Gabriel. Gabriel is asking, hi Colin, is gold a good investment during these times?
Actually, it is. Okay, so gold is like it's like a safety kind of asset. You know, when people don't know where to put, gold is like a default. You know, people will put money in gold because everything is like risky. You know, so they will put money in gold. So the disadvantage of gold is, number one, it costs money to buy gold. Okay, because either you buy the physical gold or you buy the actual gold, it costs you money. If you buy physical gold, you need to have a place to store. You know, you cannot be storing it in your house. You need to have a place to store the gold. Second thing is, if you buy, right, then there's cost, because either you buy a gold ETF, which uses a futures contract, that also costs money also. So that's the challenge with gold, because gold, unlike stocks, right, stocks pay dividend. You know, every year they can pay dividend. Gold cannot have extra gold, cannot have children of gold. You know, so gold is just a static thing. But gold is very good when you have in terms of crisis. Okay, interestingly, right, in crisis, Gold is good, and one more currency is good. Guess what currency? What currency is good? Singapore currency is good.
Oh.
Singapore dollar usually in crisis will be good. So Singapore is like a hedge like that. So when people don't know where to put beside US dollar, they will also put in Singapore dollars also. So yeah, that is traditionally right where when people feel that hey, they're in danger, they'll put US dollar, gold, and even Singapore dollar. They feel it as like a safety. Yeah.
I see.
Yeah.
Okay. Thanks for that.
Yeah.
So it's a really good time to be holding Singapore dollars and as a Singaporean as well. Okay. Hi Alexandra, who has just joined us. Yeah, we're with Colin Xiao right now, author of Systematic Trader. If you all have any questions to ask him, kindly post in the comment box. And do help us to share this video with your friends on your wall as well, so that more people can learn together. Next question, Colin.
Yes.
Do you feel that hedge funds are buying into the market now, or is it the retail investors?
Currently, I feel that the retail investors are buying into the market. Actually, all this information you can find online. Okay, over the last, I would say, almost a month. Okay, the big boys have been selling. You can go to SGX. You find there's a link. You can find under the link institution buying versus retail buying. Almost every week they report, right, what is the amount of dollars institution are buying and the amount retail are buying. Almost every week, the institution are selling and the retail are buying. So I think out of it's quite consistent. In fact, I did a post on the Facebook group. Yeah. So at least for Singapore market, it's like that. Every week they report what is the institution buying and selling. Yeah. So in the last 2-3 weeks, they've been selling more aggressively. Talking about like 400 million, 300 million a week. Yeah, kind of thing. And the retail are on the opposite side. The retail are the one that are buying this.
Okay. Yeah. And what does this signal, Colin?
So, okay, you see, when the market goes up, right? When the market goes up, there will be people opening an account and participating in the bull market over the last 11 years, from 2009 March all the way to 2020, right? 11 years, right? There are people participating in the stock market, but then there will be a small group of people, right? They'll say, no, the market go up too much already. I want to wait for market crash, then I want to get into buy. So now at this period, right, there are people rushing in to open up trading account, and then they are new to this market. They open trading account, they are new to this market. Yes or no? They have not opened any trading account before. So when they come into the market, they have no idea where price is. In the like market drop. Okay, it now looks like market is going up. They just start to rush in to get in. And I think right now there's another theory. The other theory is because everybody is on lockdown. Singapore pool is closed. Singapore pool is closed. So in order to have some excitement, where did they go? Market, that is another theory about Singapore. I think there is maybe a certain percentage of truth, because people just need to bet on something, right?
Right. So they now use the stock market as the new betting center.
Alternative gambling tent. Yeah, which is no good.
Scary, man.
Most likely, in Chinese, they say 大鱼吃小鱼, right? Even though in the short run, people will make money, but in the long run, those people who are new, inexperienced, people who are greedy, end up will lose money. I recently have a trader, a full-time trader. He told me his sister's boss, right, max out all his credit card and buy shares. Yeah. It even appear on the newspaper. This guy, right, max out all his credit card and go and buy shares recently. Of course, he may be profitable now because that report came in about maybe a month ago. He may be profitable now. But the point is, when you're profitable, you will not so. You will not say stop, right? You most likely will say, okay, let's do some more, because I'm so smart suddenly, I just open up an account and I'm making so much money. So likelihood they will add on position. And when it really move against you, that's it now. Yeah.
Yeah. And that's the gambler's mentality, lah, right? When you start
Yes, yes.
winning, you
You
keep chasing
will
after
not
it.
stop lah. When you start winning, you will not stop lah. Correct.
Yeah. Okay, thanks for
Yeah,
that. Yep.
yeah.
Welcome those that have just joined us. Hi, Chin Hong. Hi, Frederick. Yeah, well, we're calling now on the topic of investing in times of crisis. So if you have questions, please post in the comment box and do help us to share this video on your Facebook. We have another question, Colin, coming from Hui Yi. She's
Yeah.
sharing about what do you think about Bitcoin or other cryptocurrency now?
Oh, okay. Interesting topic. Okay, so Bitcoin is actually not something new. Okay, it went up to high of 20,000 in 2018. Okay, so you look at technology, right? Or look at all this technology. There is a trend to it. I think maybe you know. Okay, we talk about online or internet, online shopping and things like that. When it first started, the first burst, right, was in year 2000. We had the .com. Remember, at time we have the .com. Anything that is listed .com, anything that has a company .com can list in the Nasdaq. Okay, so that was the .com era. But there isn't any add value. There isn't any add value to the business. They are just making eyeballs and things like that. So after that crash, right, then Amazon, Facebook, those companies that have really business model, right, started to really go up. I think same thing will happen to all this cryptocurrency. Initially, right, it is unregulated. Okay, because all this is unregulated. It is not centralized, and then there is no monopoly. There are so many other coins during the peak of the Bitcoin. There were so many other coins, so many other alternative coins, things like that. Same thing with the .com era. There were so many other .com company coming up and listing their company. But eventually, it will all merge or all come into like a one coin or one kind of standard, right? So right now we talk about like Amazon, Alibaba. These are the few main players, which house everyone in this. And then second thing is add value. It add value to because people have the convenience of shopping online. And then number three is also regulated. Okay, because initially Bitcoin is not regulated, but right now, eventually, I think Bitcoin will become to a state where it can help people in terms of information. We call it blockchain technology. In terms of information passed to another one, it can help to do that. Number two, it will be regulated. That means there will be someone say, okay, let me do this. Okay, do it properly. And then thirdly, its likelihood is going to be it must add value. It must add value and have a kind of monopoly kind of thing. So I think every technology is like that. Yeah. So cryptocurrency, I think yes, but whether it's Bitcoin, I don't know. Yeah. Cryptocurrency is something that can add value, but whether it's Bitcoin, we don't know. Think about it like when we have during the same thing with live music also. Live music, we have like LimeWire. Do you know? We have Napster and things like that. They were very unregulated music. Yeah. Then it crashed. And then eventually, we had very regulated iTunes, Apple Music, Spotify. But this one has a revenue model, because the publisher, all these people still get a cut of this revenue. It's controlled. It's not like Napster, or this not controlled. It's controlled. It's regulated. It's value. Then it will rise. So look for something that is like that, no?
Delivering real value, right?
Yes.
Okay, good. Yep, if you have just joined us, hi Doris, hi Johnny, hi Sally, hi Terence. Thank you for joining us. We are live with Colin Xiao, who is the author of The Systematic Trader. He's now taking questions on the topic of investing in times of crisis. Yeah, if you have any questions, please post in the comments box. I can't promise that we are able to answer all the questions. Yeah, we'll try our best. But for those who post your questions, 3 of you will walk away with a copy of Colin's book, The Systematic Trader, in the lucky draw. And do help us to share this video while you're watching so that other people can benefit as well. Okay. Okay, this person's question I cannot miss. Michelle is the one who taught me how to use StreamYard. So obviously I must let her answer her question, Colin.
Okay.
If you are a noob and relatively conservative, what suggestions do you have for us?
Actually, the best thing you can do, right, is not to do stock picks. You know, if you are new, don't need to do stock picks. All you need to do is just to go to, let's say, assuming you're a Singaporean, right? What you want to do is just to look at the STI ETF. You know, we call it the STI ETF. Basically, ETF is like an exchange traded fund. So you heard of like unit trust funds and mutual funds, right? So ETF is exchange traded fund, but it is passive managed. It's passive managed. So they don't have a lot of fees like unit trust fund and mutual funds. So what you can do is, if you don't know what to do, just buy the STI ETF, you know, and just hang on, you know. STI ETF, basically what is inside STI ETF is the 30 biggest company in Singapore, you know, and then you just write it through. That means even if there's a recession and the recession come in like another few more months, you should be able to write this whole thing through. Because over a long period of time, the STI, I think the statistics about 30 years, right? STI go up about 9%, 9% a year. So if you are willing to hang on, if you don't know, want to look at something that won't go to zero, you know, it cannot be all the 30 companies go to zero, right? So you buy the STI ETF, it's low cost, you're buying the big blue chips, you are diversifying. So this will give you good. Another thing you can do is really to invest in yourself. So I'm really an advocate of investing in myself. Like this month, in this crisis period, I attend so many courses, online courses, so many courses, you know, paid courses, you know, I attend so many paid courses. So really invest in yourself, because at the end of the day, if let's say you can make 10%, 20%, 30%, it's based on your decision-making your machine here, you know. So if you can invest in this machine, from 10%, now you know how to make 15%, then it makes sense to invest in you, you know, rather than just invest in the stock itself. First, invest in you, so that you have higher leverage, right? Then in the future, you can get higher returns with you.
Okay, thank you. Thanks. Yep. I have a related question here. So it comes from Kim. Kim is asking, just now we're talking about ETF, right? So her question is Singapore ETF or US S&P ETF, which one is better?
Okay, good question. So just now the question is answered because you're Singaporean. Because if you're Singaporean, there's no currency risk. There's no currency risk. That means you buy US ETF, right? There is currency risk because it's priced in US dollar. Okay, it's priced in US dollar. Somebody asked Warren Buffett, or actually Warren Buffett in one of his letters, he said, if right now I were to kick the bucket, what would I do with the money, right? He will put 90% in US S&P ETF, 90%, and 10% in a bond fund. So that is what he will do. But for us Singaporean, we have one more risk, is currency risk. Or currency risk. If you buy US ETF, yes, it's good. US S&P ETF is even bigger. It's an even bigger companies. They're all the Microsoft, Apple, all the biggest company in the world. But the thing about it is you have currency risk, or you have like is priced in US dollar, so you have this currency risk to factor in. Okay, but if you talk about just company itself, which one is a better company, I would prefer the US companies, you know, because US companies are much bigger. You compare Apple with Creative, right? I would buy Apple. No, Creative is not in the STI, but you will buy the big companies. The only thing is currency risk. And why is it right now there is a challenge out US dollar is because right now it's what we call Fed printing money infinity. You know, when will the day come out when they realize that the US debt is so much, it cannot sustain this debt. We don't know when. We do not know when. If let's say US, the country, is a person, long time ago, it's already declared bankrupt already. You know, it's already declared bankrupt long time ago. So because of the debt that we have, okay, and compared to the money he make and the debt that he have, is already a bankrupt person. But because it's US, okay, and US is a very unique position. US dollar is a very unique position. Why? Because when you buy oil, it's priced in US dollar. So you have to buy US dollar to buy oil. You buy gold, also priced in US dollar. So you buy US dollar to buy gold. You buy almost everything I need to buy, go through US dollar. Buy corn, everything is priced through US dollar. And so because you have this to go to US dollar as the safety currency. But in reality, it is not like that. In reality, if you are talking about this person, this US is a person, long time already he's declared bankrupt already. That's also reason why US always want to protect US dollar and oil priced in US dollar. You know, they always want to protect this thing that oil must be priced in US dollar. Oil cannot be priced in now China thinking of pricing it in yuan. You know, that time I think it was long time ago. I think was Iraq wanted to start oil futures priced in other currency. Then what happened to Iraq? Invasion. You know, they cannot afford oil to be priced in any other dollars. You know, because that will lose their currency. You see, so that's the challenge. So, but with China coming in, right? China can maybe come in and say, "Hey, now I want to price in my currency." That will cause a shift, but I think it's a slow shift. And also have to do with military power. So military power, because they protect all the oil, so it's also that thing. So military power, US dollar, military power, US dollar, and all these are linked.
A lot of geopolitical considerations.
Yes.
So kind of supporting the US dollar.
Correct.
Although they are bankrupt.
Correct. But I think the most important thing for everyone you listening here is to learn how to invest. The worst thing you can do right now is to leave the money in the bank. Why? Because everyone is going to minus interest rate already. So you go with money in the bank, you confirm. I think you get worse before you get. I don't think it get better. It will keep getting worse. So if you leave the money in the bank, the acceleration of your devaluation of your money will get faster and faster.
Okay. So on this topic, the next question is from Thomas. Thomas would like to ask, would you feel that value investing approach is preferred to dividend stock approach for the Singapore market during this time?
I don't use both. Okay, value investing, right? Value investing, the idea is you want to buy value, you want to buy good stocks, you know, of value. But the challenge in market like that, right, is it does not mean when the stock is undervalued, it will go up in value. Yes or no? It can remain undervalued for a long time. So that is the challenge with the value investing approach. The dividend approach are also challenging because dividend, you use past dividend as a gauge. How much dividend they are paying in the past to decide whether this is a good stock. But it's not forward looking, you see. They can say, oh, no money, stop dividend. I think it is Exxon, is it? After 48 years, is it? They stopped paying dividend. They stopped dividend for the first time since World War II. Since World War II. They've been paying dividend every year, you know, and then suddenly, oops, this year I think I can't pay dividend anymore. So it's difficult to use dividend approach. For me, my approach is systematic approach. Okay, in systematic approach, how it works is we do analysis of the market, okay, and then we find strong stocks in the current market. Okay, like example, in February 17, right? I picked up a stock called Zoom, ZM, right? Zoom, 17th of February, and I told all the people in the Facebook group, right, and also all my graduates, 17th of February. The market corrected. Since then, 30% down, and then right now recovered 15%. So in general, from 20th until now, it corrected about 15%. Zoom, right, from 17th February until now, went up 80%. 80%. Yeah. So if you can use comparative, you can identify what is a good stock. And use systematic approach, you can identify what's a good stock.
Right. Okay, thanks for that. And that also leads us to the next question, which is by Shannon. So say someone who doesn't have time to monitor market what strategy or tool can be deployed to tap into market opportunities? Kind of related to what you mentioned earlier.
I show you the easiest timing tool ever, okay? The easiest timing tool ever is if you read the papers and when they say we are in recession, okay, then you open up your account and buy. That is the easiest timing tool ever, okay? But officially, we must officially say we are in recession, then you buy. Okay, let me explain why. You see, in a recession, right? Okay, in a recession, 6 months before the recession is the worst period for stocks. So it's not the recession itself. It's always 6 months before the recession. Okay, so on average, I think 64% of the time, market is down before the recession. Okay, before the recession. So the market really came down. Okay, and the average recession is about 11 months. Okay, it ranges 11 months to about 300 days, also about 11 months. 11 months. So if you have time to hold, right, and you do not know where is the bottom, right, when we are officially in recession, when they say we are officially in recession, you buy and you can hold more than 1 year or 1.5 years or 2 years, you'll be profitable. Do you follow what I'm saying? That is the easiest timing tool. So understand that the stock market does not move with the economy. The stock market is always in front of the economy. People will sell in anticipation of the recession. People will buy in anticipation of a recovery. Do you follow what I'm saying? Yeah. So if you officially say we are in recession, and then actually, if you say you are in recession, you can give maybe 3 to 6 months. I say, okay, within that period of 3 to 6 months, you buy something, and you can hold for 1 year, 1 or 2 years. I think since World War II, you'll be profitable. Since World War II, since World War II, there are about 11 recessions. Since World War II, about 11 recessions. And the last, out of the 11 recessions, 6 of the recession, the market actually went up. Yeah. So you think about it, and recession does not last very, very long, generally.
Okay, thanks for the advice. Yep. So for those who are watching right now, hi Michelle, hi Ju Kwang, thanks for joining us. Yeah, we are now live with Colin Xiao, who is the author of The Systematic Trader, and the topic today is investing in times of crisis. Wow, Colin, time flies, man. It's supposed to be a half an hour segment.
Half an hour.
I know you're really tired. A very long day for you. Thank you for staying so late with us. I think we will have time for 2 more questions. Before we call it a day. So for those who have burning questions right now, please post your question in the comment box, and then I will invite Colin to answer them. But my apologies if we can't answer all the questions. But definitely, whoever posts question, you will have a chance to take part in our lucky draw, where 3 of you will walk away with a copy of The Systematic Trader, which is written by none other than Colin Xiao. Okay, next question. Wow, Colin, this question is close to your heart, man. Is the Trader GPS program more suitable for CFD only, or is it okay for options as well? Who else to ask, man? You are the inventor. The inventor of Trader GPS.
It can be used for both. It can be used for Trader GPS, can be used for CFD. Even you lose leverage, you can use it for leverage. You can use it for options. Options is a little bit you can do strategy. You can use strategy to make money from options. But both is possible. Yeah. I don't see the question there. Is there a lot of questions?
There are quite a lot.
Okay.
I'm picking. Yep, I'm picking them.
So
whatever you see on screen those that have been picked.
Okay. But there are questions.
Okay. There are questions in other place. Meaning?
Never mind. It's okay. On my watch list, there are questions.
Oh, you are right. I can't see your watch. I can only see those on Candid Creation page.
Yeah.
So next time okay. So that was our second last question. Our last question today, okay, let's see. It's from Cheng Wu. Cheng Wu is asking, what do you mean by strong or weak stock you mentioned just now? Is it related to fundamental of the company or just so-called hot stock with high volume in stock market?
No. Okay, it's not like that. Okay, so what happened is it's not neither. Okay, also. Okay, so what happened is when we talk about strong stocks, right? It's really very situational. When, let's say example, I give you an example, right? When in this COVID virus issue happened, right? There are certain stocks that are actually right now doing very well. Okay, remote working stocks like Zoom, stocks like Netflix is not remote working, but it benefit from this virus situation. Stocks that are related to the COVID virus getting the vaccine, they're doing very well also. And then we have also food. Okay, smart farming potentially can do very well also, because why? There's right now disruption in all these supply chain, food supply chain and things like that. Recently I read Italy, there's a lot of olive, they just leave it to rot and things like that. Before this crisis happened, somewhere in January, this I just read recently, 1/4 of the world pigs died. 1/4, 25% of all the world pig died because of the swine flu. Okay, and right now plus this COVID thing, right? And then they don't have the supply chain thing, right? People will be more affected.
Yeah.
Okay?
Yeah.
People are more affected now. So these are some of the sectors that will be benefiting from it. Then there are other sectors that will be suffering. Example, tourism. Example, cruises. Things like that. They will be suffering because of this virus. So I have a tool that is able to identify, right, situation like this. What are the strong stocks and what are the weak stocks? A bit difficult to explain right now. But in general, we compare that with the index. Okay, we compare that with the index. Index is like what's happening right now, the average. And some stocks will outperform the index. Okay, so like the COVID virus situation, some stocks outperform it. Then you identify them. Then some stocks underperform. Then from there, you identify what are the strong and weak stocks. Yeah.
Okay. Thank you very much. Yep. I'm going to do a share screen. So we have almost come to the end of our session today. But I know many of you still have many questions for Colin. Yep. So on the slide here, you will see some ways you can get in touch with Colin. If you want to find out more about the tool that he talked about earlier, you can follow Colin on his Facebook or follow him on LinkedIn. He has a website as well. So these are the 3 ways. You can snap a photo right now. Okay, and Colin is also very, very kind. He has a e-course that he hosted on his website, colinxiao.com. So if you follow this URL, you'll be able to attend this e-course. Colin, is it for free?
Yes, it's free. It's free.
Excellent. Okay, so he's sharing this e-course with all our viewers. So please take a photo. Then you can get access to this.
Yeah, this is O.
Right.
That's an e-cost/O, because I will put 0. I don't have. It's /.
Remember, the last alphabet is O, not 0. Okay, so this is a gift from Colin to all of you. All right. Next week, AMA series will pause for a week because on Friday we are organizing our first ever Talking Books. Talking Books is where we are inviting 6 published authors, many of them very esteemed authors, to be sharing with us in one evening in this webinar. So you see the URL or the QR code, you can scan or key in the URL to register. This will be happening on Zoom webinar. So you do need to register in order to get the Zoom login details. So in Talking Books, we have Andrew Chow, we have Joanne Lai, we have Douglas O'Loughlin, we have Chris Ang, we have Andy Yu, and we have Sari Marsden. All of them will be sharing a passage from their book, and all of them have written on different topics. So that's going to be really interesting. And other than that, each of them is going to share with you 3 practical tips, all right, that you can apply to your life. So in one evening, you're going to walk away with 18 learning points. So do register and join us on next Friday. That's 22nd of May. All right. So before we end, Colin, thank you very much for spending your evening with us.
Thanks.
Answering many questions. And from the comments that I've been seeing, many of them find it very helpful. They were all thanking you for your insights. So I think you have really delivered a lot of value to our viewers. Yeah. Before we end, continue to comment and leave your feedback for us in the comment box to help us to continue to improve. You can share this Facebook video as well. So after this session, you will still be on our Facebook page. And then please like this video and support us. If you want to buy local books, you can check out candycreation.com. We have a bookshop there. And we will post out the books to you. All right. So last but not least, I want to thank all of you for really spending your precious evening with us in our episode 4 of Hello, I'm an Author, Ask Me Anything. Thank you for your very active participation. All right. So I'll see you all next week. Do register for Talking Books happening on Friday, which is 22nd of May. Goodbye, everyone.
Thanks.
Colin will say goodbye. Thank you, everyone. Bye-bye.
Bye-bye.